And we're live. Markets are back active. So, ladies and gentlemen, welcome back to another Sunday Market Outlook. Your host, Roy Dunia, full-time day trader, co-founder Chart Addicts. People have been telling me lately, I'm a streamer. I'm not a streamer. I'm a guy who streams. Let this be very, very clear. Sunday Market Outlook, we're going to cover data releases for the week, just in case there's any red flags to watch out for. I want to do a quick update on the economy. So you guys know I was waiting for the Fed meeting all December. We finally got the Fed meeting. What does that mean for 2024? I'm going to be explaining that. And obviously, I want to show you guys these trades that played out from Friday. The trades from Friday, so solid. The whole market action so far has been good. Now, let me talk about Nasdaq real quick before we go into the news. Actually, matter of fact, let's do this first. How's everybody's day going? Let me just put a put like a one sentence thing about something you did this weekend that meant something to you, right? It could be very simple. Could have been a meal, could have been something you watched. Give me one thing from this weekend that you guys enjoyed, and let's go through these comments real quick. And while we do that, I'll tell you guys my story. So you guys a funny story from this weekend. Let me see if I can cook one up. Is there anything from this weekend that really stands out? I was doing a lot of catching up this weekend on a bunch of stuff. Let me think. It's a meal, right? There's these rice cakes with this sushi on top, with this glaze and this honey. I'm going to go see family next weekend. Pretty excited about that. So that's pretty good. Spend time with family. That's awesome to hear. Very productive weekend at work. Gabe always working. Stephen Barry got a great workout in, and I did some cleaning. There we go. That's what Sundays were for. Sundays, I was eating good. I was taking care of the house, making sure everything was ready for the week, game planning for the week, because obviously there's a ton going on. Between now and next year, there's people that are like the New Year's resolution folks, their clock starts after midnight. Well, after the hangover wears off. So if you're really prepping right now and getting yourself into a rhythm of planning for the week and just doing just 20 minutes, 30 minutes of prep, it might change your life. I'd love to see it. Met some friends, went for dinner and drinks, haven't socialized in months. Love to see it. You gotta take care of all aspects. So I know sometimes it feels like, going out might seem like an unproductive thing. But if you haven't taken care of the spiritual, well, first go the spiritual, the health, the social, right? And then if you're not taking care of each of those facets, it's going to come back to you in your trading. So make sure you guys are taking care of yourselves. So it's selfish, but it's also selfless. If you want to take care of the people around you, you got to be in the best state possible. If you also want to be an effective trader, if you want to be an effective employee wherever you work, if you want to be an effective business owner, if you're a business owner, an effective husband, whatever you're trying to do, you got to have this, you got to make time to be, for those things. If you're not making time for the family and they're always saying how much they miss you and all this stuff, and it plays into you when you're at work or when you're trading, you're like, damn, I just want to be off the chart so I can go back and do that. Spend some time with the family. Today is productive. House cleaning, groceries. Yup. Me and the kids got house cleaned. Love to see it. Worked out all week. Had my rest day today. Rest and refeed. Rest and refeed, people. Okay, let's check. We're here. Yo, the GOAT. Happy Sunday. Right back at you, Jensen. Happy Sunday. Passed phase one of my challenge on Friday from that. Made my whole weekend. There you go. I enjoy special time with significant other. Love to see it. Learned a new skill, some woodwork. Good for you, Casey. Anybody else learning new skills nowadays? It's like, oh, there's so much shit going on. So much shit. Oh, I always wanted to play an instrument, but oh, there's so much going on. It has never been easier to learn something new. Unsubscribe to fucking everything and everybody and start from scratch and say, what do I want 2024 to look like? Say, do I want to learn a new instrument, a new language? Have I always wanted to travel places? Put some things on a list. Unsubscribe and unfollow. I'm not going to curse. Everybody that does not align directly with the things that you want. If trading is your number one goal, and really you should have, goals for your family and everything else, stick to things that are going to directly lead you to where you want to be. And the distractions along the way are going to, oh, shiny, oh, shiny. You can't get anywhere stopping every few seconds and smelling the flowers. All right. Social media has become very dangerous, yo. And I'm not talking about from the trading side. I'm talking about just social media in general. They're getting good. They're getting really good. I'm sitting here on Twitter. I'm just reading the comments. I don't even watch some of these videos. Guys, I read the comments. This is not good. Right? So I sat here and took an audit this weekend of how much time I was spending on these sites, on these apps. I mean, too much. I deleted some of the apps, and all weekend I was happier than I've ever been. Ladies and gentlemen, find the apps that are pissing you off. When you spend time on an app, and then when you get off, you're like, I don't really feel that good about myself. If the app does not give you satisfaction, like after you get off the app, you're like, that was time well spent. Delete it. Just do it for a day. See how much better your life is. And then obviously, guys, all this translates to your trading because if you have a lot going on mentally and you're trying to focus singularly on one thing, but everything in society is trying to get our attention span to get shorter and shorter and shorter, it's going to be very hard to focus on one thing for a long time. And so that's where the mistakes are coming from is we're building our entire life around this short-term dopamine release, this short-term feedback loop. And then we go to trading, which requires the exact opposite. Trading is wait a minute, let me assess this before I take a decision, right? Trading is like, what could be the downside consequence? Let me look at both sides of this, the downside consequences and the upside consequences. Now let's look at what social media is doing today. Every opinion on social media is polarized. There is no both sides of it. I mean, unless you guys are, you're right-minded. So these are the things that we have to watch out for today. I really don't think, well, there's always the over trading and over leveraging that'll be the cause of a trader's downfall. And when we're looking at what are these societal things or what are the lifestyle things that are common with everybody right now that are probably hurting us just a little bit in our trading, can we have an honest, like put a one if you guys agree. Would you guys agree that social media, and I'm not talking about the content on it, because honestly, I feel like there's more good content on social media related to trading than there ever has been at any other point ever. But just the use of social media, pulling it up, scrolling, short-term feedback, the videos are getting shorter. Am I bugging? Is this just me? Have we not gamified society? Happy Sunday, y'all. This is a Sunday market outlook. All right. So get off the socials, get off the apps. The technology is killing you. I did it. St. Jude's is coming up this year. All right, let's go into the Forex news and then we'll get started. All right, so this week, not too interesting. I took a look through. We have a Bank of Japan conference, which after last week when they said they were planning on shifting their rate policy, now I'm interested. So really with the Bank of Japan, they have such a long-term strategy that I'm not checking back every week on what they're doing. This is basically like when the United States decided to have a policy of printing money. We did that for 14 years. Imagine every day you looked under the hood and say, oh, is there anything new going on? Nope, they're still printing money. So the Bank of Japan having negative interest rates, that's a long-term play for them. It seems like they're having a change of heart because they can't keep up with the rest of the world. So I'm interested now to tune in to see if there's any major changes. There's some major changes in the US policy following last week's press conference with Jerome Powell. The rate decision stands, no rate change. So we're still at 5.5%. So everyone's like celebrating and the stock market is booming. None of us can go get a house. Did you know that the average mortgage payment in the United States is up 90% in the past couple of years? 90%. If you thought getting a house was expensive a couple of years ago, it just got twice as expensive. Thanks, Joe Biden. But on a real note, I think that Jerome Powell was not trying to spook the markets. And so he basically said there's very little chance of rate hikes next year. And they probably will be cutting rates at some point. Like the market got very happy about this. I think that the beginning of January, Jerome Powell is going to be brutally honest and say they cannot just start cutting rates. Inflation can tick back up because of one global emergency. We talk about this all the time. Imagine China decides to have a blockade in the South China Sea, and now we're at a standstill with China. Nothing serious. There's not a single missile that gets fired. It's not even a declaration of any conflict. It's just a standoff. That alone will hurt supply chains, and all of the goods that are being consumed by the rest of the world will go up in price very quickly. And so they have to make sure that the inflation is coming down in a serious way. And Jerome Powell said very early on when they started their policy that they have to overcorrect. And it's safer for them to overcorrect than undercorrect. He's being generous because it's December, it's holiday season, and he's not going to spook the markets before the end of the year. All right. He wants everyone to be happy and have a great holidays. Wow, Jerome, you're really the guy. And then January 1st crashes the whole thing. No rate cuts. Are you stupid, people? Why would we cut rates? Inflation's only at 3.1%. The last 1% is the hardest. Have you guys ever tried to lose weight? You're like, I'm going to lose 15 pounds. First 10 pounds gone in a day, right? The other 4 pounds, you're taking a couple months, right? That last pound, you guys ever tried to lose the last pound? I don't go off pounds. I'm trying to go off of just an analogy here. But you guys know what I'm talking about? So Jerome Powell cannot stop. And if he does, what he's going to do is make sure that everything is smooth until the end of 2024 because it's an election year. And then 2025, inflation is going to come back up, depending on who wins. Obviously, we'll see. So the first 6 months of 2024 is going to be a feel-out period. Can Jerome Powell pull this off? And then obviously in the first press conference, we'll have that answer in complete certainty. So next year is going to be a wild ride. For PCE price index, this is going to come out on Friday. Again, PCE is just the main inflation measure that the Fed uses. And then final GDP for the quarter on quarter. This is not for December, this is not for Q4, which is the last 3 months of the year. This is for Q3. So GDP, again, it's released in 3 different parts. There's the preliminary, there's the advanced, and then there's the final. The final is released, I think, 85 days after the quarter ends. So this is going to give us the final GDP print for Q3. 5.2% is good. Shout out to America. Guys, quick stats about America. I know not everybody here is in America, and that's fine. But I have to give a shout out to the States real quick because doing pretty good. Inflation came down in 2023 meaningfully from 6% down to 3%. I just gave, I gave Jerome a hard time about how hard this is going to be, but that's meaningful. 6% down to 3%. We hit the target. Also, stock market broke all-time highs. Okay, that's really good. Home prices are high, which is a problem for new home buyers, but not necessarily for existing home buyers. The interest rate problem it's a necessary thing. Everyone's pissed off. No one can get a house. But guys, we just printed 17 trillion, got out of a pandemic. And so I understand like the Fed just can't start celebrating because from my perspective, things are looking pretty good. And if we keep going down the line, we had a record year in oil production. And so OPEC, really, it's like Saudi Arabia and the boys, they're the ones who typically produce most of the oil. But the United States had a record year in terms of oil production. Now, I think that's because Biden spooked all the oil producers, telling them like no one's going to be able to have a combustion car by 2030 or whatever he was saying. And I feel like the oil production in the country kind of got lax. They're like, all right, pump as much as you can. You guys have a window here. And after that, we're going to start to really put some regulation on you. So I feel like in the States, things are looking pretty good. And in 2025 or 2024, if we can sustain this momentum, I think we're looking good here. But it's an election year, and that throws everything I just said out the window. Isn't this game fun? All right, let's talk about the charts. Last week, this is the trade that we were watching on the stream. There was a sell at the 886, and then we were looking for this buy. Markets were too slow. We didn't have that opportunity to take the trade on stream. But eventually the market did retrace back down. And Just to remind, there's two reminders from this trade. Number one, I'm goaded. Number two, the markets are not always going to look the way that you want them to, but trust in your system. So the before and after, okay, a little dip below the 886, maybe even a little bit below the bottom of the fib. Price came down to touch. This was a little bit of an emergency line. I did enter here and I entered a few extra positions as well. Not, it was sketchy. First reaction, okay, solid candle turnaround, and then we had a full push all the way back up to the previous highs. Now, I didn't get a chance to take partials. I was actually on the phone with Gali when this happened, but as soon as it started to retrace back down halfway through the wick, I ended up closing partials and then held the position. So pretty good trade overall. In case you guys really want to see, it was a lower time frame re-entry. The market had pushed up aggressively all day, and so I just waited for the pullback at the 88.6. And I had gone down to the smaller time frames to find the body, but basically the trade looked like this. Stops 20, 30 points below the low. Entry 886. TP1, TP2. You guys get the drill. Now, I'm actually going to analyze the markets from scratch today because I've realized I haven't really done that on a Sunday outlook in a while. Mostly because I've just been tracking these trades for the purposes of keeping the receipts from the live streams of all the trades that we're taking. But it's important for you guys to see how I analyze, especially if I want to analyze this from scratch. Now, this is the chart from last week. I don't want to change anything on this. The way it is actually perfect. And so for my own analysis, like for this chart, this is perfect. If it comes back down for one more retest, I'm going to buy it. If it comes up here and rejects again, I'm going to sell it. If we retrace all the way down, I'm going to wait for one of these fib levels right here, take the market back up. So my entire playbook is already here. The blueprint is set. Let me go to another broker feed right here, which is Black Bull. Slightly different chart, but it's basically the same. Roy, do you take trades on Sunday? I'll answer this the same way I answered the question about if I trade outside of the New York session. What happens if it hits my pre-specified zone outside of my predetermined session? What I do is I can enter a trade on a Sunday. That's part of my plan. I don't expect it to move until tomorrow. So really, it's that simple. Find the session that you want to trade. Find like the little micro volume area of that session that you really see consistently. And then if you see it hit a specific zone, like if your strategy is that third touch on a trend line, we were talking about this. This is like a very simple strategy. You get a third touch on a trend line, the market dips under, comes back up. Okay, it closes above the 61%, and there's a resistance turning to support. You have multiple confirmations at that same area. You get that push. The strategy that you use, hold on. Okay, so if the strategy that you use lands you an entry right here, if this entry is on a Sunday, take it, but don't expect it to start really moving until later in the week once there's volume in. Bro, I blew my funded account and I'm pissed AF. Well, Josh, tell us what happened in the comment section while I analyze this trade. And if you guys have anything you would like me to analyze, shoot it over to me. Walter said, thanks, Biden. I don't know what's going on. I think the Treasury and the Fed are conspiring to keep Biden in office or just to keep the Democrats in office, which is not really a conspiracy because they're both hella Democrat. And that's just a fact. So I took that trade too. Good for you. Would you consider taking sells from that 886? Mike, you said 88.6. What do you think my answer is? You said, would Roy take a trade at the 88.6? Was that what you're asking me right now, Mike? Mike, are you asking me if I would take a trade at the 88.6? Can somebody answer that for me? Walter just said, heck yes, because it's Sunday. And I'm not cursing. He said 88.6 for the win. Oh, yeah. What's your thoughts on GBP USD? We'll get on. It says vacation time, ladies. I'll be back on in January. January. More pips for me, brother. Roy, do you take trades? Okay, I'm pissed. Thoughts, this and that. Okay, let's go through NASDAQ. Just a quick recap of where we're at. We had this consolidation area basically all of last week. Price really pushed off Wednesday through, actually, this was 2 weeks ago. This is last week. And then we ended up ending the week in this little bit of a consolidation right here. So as I always explain, whether it's small or large, the market is either ranging or it's trending. So in a consolidating range, you can just basically trade the lows and the highs. It's the very basics, y'all. This is the very basics. We go through this in the course. This is the basics. There's a sideways market, and then there's a trending market where you're literally just looking for these retracements or pullbacks so you can buy low and take advantage of that moving trend. Okay? This looks a lot to me like a range. We have a high, we have a low, and we have a high that's been retested. So where do you guys think I'm going to buy this thing this week? Just go ahead and, based on this 45-second master class in Forex and NAS100 CFDs, where do you think I'm going to be taking a trade? Jensen said we'd them 88 boys. Yes, the t-shirts are coming soon. How my pips taste. What's the other one? Your stop loss is my entry. 88.6 for the win, or 88.6 boys on the back. Dude, yo, if somebody wants to cook up an idea for a Letterman jacket with 88.6 boys in the Chart Addicts patch on it, just give me a rough render and send it to me. We got to make that thing happen. I need a varsity jacket, like a Letterman jacket, with the Chart Addicts patch, and it says 88.6 boys on it. Somewhere. All right. Devontae said 16,350. No, let me check my. Okay, discount price 88.6 or under. Barry got it. Yes, sir. Steven on fire. At our discount price 88.6. I gave you guys the answer talking about the jacket. All right. We have a range here. I just told you guys I buy the low of the ranges because it's buy low and sell high. The market's going to get down here to the low of the range. Oh, Roy, are you going to buy it there? No, because I'm going to wait for you guys to buy it here. Then me and the Chart Addicts, the real 88.6 boys, are going to wait for that liquidity grab. Once that happens, it's entry on the retest of the 88.6, stop loss below that wick that just got formed and took everyone's money. New shirt, thank you for the liquidity right here. Potentially an inverted head and shoulders. I'd like to see something like that for an extra confirmation. And then we have TP1, TP2 to the top of the range and beyond, because we're in an existingly bullish market. And you guys know Roy's first law of trading thermodynamics. A trend in motion will remain in motion unless an area of structure gets broken. You're welcome. You can take that one to the bank, then bring it back and give me my cut. Okay? It's a Sunday. What are we doing? Okay, we just did NASDAQ. So I'm basically waiting for, what is this 88.6? 16,444, like the great Jay-Z album. 16,444. Wait for that liquidity grab. Wait for the baby pips. We call this the baby pips wick, retest, and continuation. All right. And then we have another trend. And then another potential range. Okay. If this thing decides to reverse back down, I'll just draw my fib from low to high, wait for the 88.6 down here, and then we can take this thing to the moon. Because of Jerome Powell's statements last week, everyone keeps telling me that, this has already been fully priced in. I don't think everybody understands. The market has a lot of dry powder on the sidelines that they've just been itching to throw somewhere. These idiots can't make money in a bear market, so they're like, please, bull market, anything. And they will start throwing money back at the markets. All the big investment houses, all the venture funds. I think that 2024 will start off very optimistic, and they're getting a head start. So I don't see any reason for the bullish trend to turn around. But of course, if an area of structure gets broken, we will reassess that trend at the time. Stop losses will be set ideally below this wick. However, below this area here would be the best. Okay. Put it just slightly below this area. Entries at 16,444. And I'll see you guys on the other side of that. AKA, I'll be live streaming all week. So you'll get to see us catch this live on the stream. Okay, let me see what's happening in the chats real quick, and then I'll cover gold. After that nice retest of the lows, 88.6 for liquidity. Let's go. You guys got it. We them boys. Okay, Sunday night football. Roy, if you drop merch, I'm copying it. Okay. Sunday night football. Saying trading for almost 3 years. Felt like I haven't reached anywhere. This thing probably not for me at all, man. Ghost Monkey, tell us, why has trading not worked for you? Actually, matter of fact, before you do that, answer me two questions. Number one, do you have a trading plan? And number two, do you journal your trades? Give me those two answers. I'm going to coach this individual live on this call right now, if they will allow me to. They're under a pseudonym, so hopefully you feel comfortable just basically saying the truth because your real identity is not behind it, so you have nothing to lose here. But give us some good information, and let's see if I can get you coached back up to see if trading is for you. And now listen, you might be watching this thinking, I mean, what, trading is not for me. I'm going to make this work even no matter what. Everyone has to be realistic with themselves at some point. Okay. And I'm going to give you guys this ultimatum. It's not about whether you can or can't be successful at trading, because you all can. The question is, will you commit to doing those things that you know are required for successful trading? Like if I told you that working on yourself and then, kind of committing to a life of personal development for a long period of time so that you can stay in this game, and making sure that your mental health, your physical health, your spiritual health is consistently improving so that you can improve in your trading. If I told you that this was all mandatory and you realize, look, I don't want to do any of that. I wanted to click the button and make the money like they told me, and I got scam brokers and my money's gone. I don't want to do the hard work stuff and go actually really trade and build a system that works on any brokerage. If you realize you're not willing to do the things that are mandatory for success, then that's fine to admit that you're not going to be great at trading. It's fine to admit that trading may not be for you, not because you were not cut out for it, but because you're not willing to do the things that you know are required, which is a very fair thing to admit to yourself. All right. But I don't want you to. I want you all to know that you can have a better future if you improve your health and your spirituality and your physical and your mental, your emotional maturity. Even if trading doesn't work out, you're going to be a better person for it, no matter in what endeavor you take. People look at traders as some kind of like hermit sitting in front of the thing. Though that's possible. I've had periods of months and months and months where I've had to lock in on trading and really just tune out everything else and just focus. But we're trading to live. So make sure you're not neglecting the other parts of your life, and they'll end up helping you in your trading, because how you do something is how you do everything. My trading plan, I doubt it's the best, to be honest, and I recently started taking screenshots of my trades before and after. Screenshots are good, but I don't know if I actually have a set strategy. Sometimes I feel like I'm changing it. Okay, so is it fair to say that if you don't have a clear strategy, something that you can do over and over again, if you don't have something that you can do consistently, you can't expect consistent results? Would that be fair to say, Ghost Monkey? Because this is the question we got to ask, is that if you're not making money in trading, it's either the strategy, the market conditions, or it's you. When I look at any mistake I make, was it the strategy? Was it me? Was it the market condition? If you guys are trading USD JPY and you see those massive wicks that happen that kick you out of these trades, we can take some responsibility, but at some point the wicks are just atrocious. The market conditions were not feasible for us to trade in. That's what happened. But that's actually more rare than all the other ones. Most of the time, it's me. I did something wrong because my strategy, it works and it's good. If I ever see a loss somewhere, I look at it, I say, did I follow the plan? Did I do everything right? Yep, I lost the trade. Okay, chalk it up as one of the losses as part of the system. If I look at this and I'm like, but why did I chase it just 20 extra points? I just ruined the risk and reward on this trade and like for no reason. That was me. I had to take responsibility. So, but I don't know if I did. That's fair to say. So, Ghost Monkey, here's what I'd recommend to you is before the new year starts and before you give up on trading, give it one more shot, but give it an honest shot. Give it a shot of actually having a clearly defined system. Make sure the system it has a positive expectancy, meaning that when you test it, when you back test it, it works all the time. Not every time, but very often. Sometimes we get these strategies in these courses and they work sometimes, but not all the time. You need something that can work consistently. Otherwise, you're going to get bored and you're going to go back to what works. Deal? Roy, if you're looking for a good book, Flash Boys by Michael Lewis is interesting. If Michael Lewis wants any advice on trading, Michael Lewis can call me himself, David Sanchez. All right. And also, Viva Mexico, because it's Sunday. All right. Need to go. Thanks for your time. Roy, have a safe trading week. Right back at you, Max. Right back at you. Okay. What the hell happened on gold? Well, I'm going to make this very, very simple for you all. There is a low right here in an existingly bullish trend. So it's bullish, like it's coming up. Okay. We have a recent structural low right here. So what I'm going to do for y'all is just draw the low. And then what I'm going to do is find the high. Oh, well, that looks like a high. Okay, very interesting. And then I'm going to go ahead and just connect the dots here real quick. Okay. So what happened was the market went up and then it retraced, as all markets do, because markets don't move in a straight line. They move in waves, waves of impulses and retracements, and impulses and retracements, and impulses and retracements. And every single day, you guys want to know what happens? Well, we're down here. So we took the trade down here because, we're saucy like that and we're already in the buys. And as it's moving, people start to enter the trade in the impulse. And then when the market retraces, they're just sitting here panicked, like, oh, dude, what's happening? What's happening? You're on a boat. It rocked one way, and you're like, oh my God, all right. And then it rocked the other way. You're like, what's going on? You're like, well, if it rocks one way, it's got to rock the other way. They're like, what? A boat? So this is the same thing. Markets, they move in waves. And most people just don't know the basics of how markets move. And so every time the market retraces on their position, they close out of it because of one candle in the opposite direction of their trade every single time. And then 2 years later, still doing it. Isn't that crazy? And you guys are sitting there like, huh, when he started saying this, I was like, this is very basic. Why is he going through this? And then by the end, I realized, yeah, I do close my trades early every time it retraces. And then it just ends up being a retracement and then it goes my way. Huh. Maybe the basics are what we got to focus on. I'm talking to you. Yes. Isn't that crazy? Ghost Monkey, you need to take the master class on Nasdaq. It'll lock you in and make you understand the plan. I would agree. By the way, yesterday's stream was completely fire and full of gems for anyone who hasn't watched it. David, that's for the people that showed up. You feel me? Don't go ahead and go telling them the sauce. And did I curse on that? Yeah, I definitely cursed. I think I might have went ham at the very end. All right, y'all. So yeah, the market pushed up and then it retraced. There was a triple bottom rejection here at the 78. Again, remember this pattern. If y'all learn nothing from me, remember this. Market will touch, market will touch, market will break, retest, and then pop off. You might lose money here. Take the re-entry here. If you put a wide enough stop loss, you'll survive this. Okay, if you want to enter here and then put a wide stop loss, you'll survive this. And or just wait for the dip and then catch the retest. So at every entry price, you'll see the 1, 2, little liquidity grab, and then it pushes off. Just a little side note for you, not too much sauce. It's a Sunday. We're going to keep it casual. Okay. So long story short, what's going to happen next on NAS100? Or what's going to happen next on gold, excuse me. Well, I'm going to go ahead and measure this again. 1889. 1889 buy entry or re-entry, excuse me. Stop loss below the 88.6, which should put us at about 42 points, 42 pips, points. I don't trade gold. Take this with a grain of salt. I used to trade gold. I can analyze any market with my eyes closed, hands tied behind my back and from outer space. But I also admit that I don't execute trades on my broker or on the prop firm that I use with gold. And so there's a lot of nuance in what platform you have and how you trade gold, spreads and everything else. 18 or 1989 entry. The stop loss will be at 1950, rough right there, 1950. 2147. I don't think that that one's likely. I think up to the body is actually very likely here, which puts us at about a 2.3 to 1 risk and reward ratio. So how this looks without all this fancy stuff is retest high or low, because you guys remember waves. So we just had an impulsive wave. We need a corrective wave. And then we need the next impulsive wave to this previous high. If we break this previous high, that means that we're most likely going to fill this wick, which means if you take this trade, 2087 is going to be that TP, but leave a runner, because if it breaks 2087, very good chance that it continues that track up to 2147, which is a big difference. You're looking at 2 to 1 versus 3.7 to 1. Not a bad bag. You feel me? Not bad. Devontae says, I feel triggered. Devontae, what did I say that triggered you? So I can say it again. What did I say? But I can't even read your comment because then I have to read your screen name, and I'm not gonna say that out loud. I'm not gonna say that out loud. And so that's atrocious. He had a comment, but I can't even read the comment because he's got a name and I can't read the name out loud. Okay, we did gold. You guys want to do US30? Let me ask you guys. You guys want to do US30, Euro USD? Yeah, US30 or Euro USD? Let's go. Past phase one, 300K just now. On a Sunday? Or from trades that were running over the weekend? Closing early and market reversing in the intended direction. Devontae, I'm trying to tell you. Said we had this conversation before. Have a clear system, man. If you every single time you take a trade, you should know where you're going to enter, where your take profits are, where your partials are. And until it hits those levels, don't close. Even if it reverses on you, don't close. You have rules for a reason, because when you back test, this is what happens most of the time. You've confirmed that. Don't go back on that information. Men out here don't even market analysis. People find something, get mad about. Man out here don't market analysis, and people, Roger, speak English, man. Y'all gotta stop giving me dyslexia, bro. I'm already struggling, and I read the comments and the words are not in the right place. And now I'm sitting here thinking, like, I can't read? Has it been that long of a day? Closing early and market reversing, okay. Or if you're looking for a good book, Flash Boys, David, send me the Michael Lewis book. I'll take a look. All right, all right, all right. If I drop merch, you're copying it. If we drop merch, brother, we've had merch. I'm not even wearing the merch. I pointed at my hat. I'm not about to put anybody on. We'll come out with the merch. It's on the website somewhere. Interest rate cuts equals bullish Nasdaq. Precisely, Radmus. Now, Radmus, because you clearly understood the premise of this, the basis of interest rate cuts. Why is it when interest rates cut, it's bullish for Nasdaq? Can you tell me? Bought gold on Sunday, 2016, and then got out 2023. Oh, that sounds like a used car sale. 2016 to 2023. No, congratulations for the 300K win. Good stuff. Can anybody tell me why do interest rate cuts lead to a bullish Nasdaq, and everyone's voting for Euro USD. I never thought that I'd ever see the day where people would vote for Euro USD instead of NAS or instead of US30. By the way, EJ, I'm still hopeful on this. I'm still hopeful this thing is going to pop off. I'm not 100% sure. We might have a breakthrough first. If we have a breakthrough first, this will end up hitting this take profit level. 167 on EJ. I'm naming my son 167 on EJ. That's it. My son, my firstborn. Okay. What else we got? Euro USD looks like we're at this consolidation. We just spoke about this. One touch, two touch, fake out. Let me get the retest. So very likely that we head up to the top of this range here. We have resistance right here. And then we have the high of the range all the way up here. All right, beautiful. So I am bullish on this for now, but I do believe the DXY is going to hit a floor soon. So personally, it's going to be as simple as top to bottom, 786, 886. I'd like to see this area get. I'm actually going to go here. And to be honest, this double top here is looking a little bit is looking a little attractive for the shorts. I can see this thing. I can see this thing wanting to come down. I'm using the wrong levels here. I forgot I'm on Euro USD. Still go body to wick. Double top at the 71. All right. I still take this trade. I want to see a push up a little bit above this zone, maybe 1.11, like 1.11 and a little bit above, because whenever you have those psychological numbers, like just the flat numbers, 1.11, it's going to go just a little bit above. It's a bit too perfect and precise. So it'll tap it and then go just a little bit higher and then come back down. That's what I'm seeing for Euro USD. If we close above this area and start to push towards this 124, that's when I'm going to enter another trade up here for the double top, more than likely. And then if we violate that, that's the definition of a breakout, is when the previous high gets violated and the market starts to break, in which case we'll just look for the market to set a new floor, most likely back in this area here. And then we can take it up to this next level, which is 1.17. All right. So for now, I'm expecting this 1.11 sell. Can't forget it. It's 1.11. Wait for price to get up here, dip a little bit above, and then come back down. Most likely take profit area would be 1.084. That moved down. And if we break that, we're coming back down to the lows. Okay, cool. If you guys get 5% from interest and it goes to 4%, more businesses borrow. Hold on. I want to give Radmus a shot. Radmus says cuts means the dollar/inflation goes down. Not quite. We'll get to this. Why wouldn't you look for a sell, Roy? For which pair? Sold gold just now, waiting for that pullback on the H4. Okay, good for you. People have more money to invest in stocks. That's why NAS goes up when interest rates goes down. No. How does the interest rate going down mean people have more money for stocks? Where's the money coming from? Unless they have a variable rate mortgage. Now, look, 80% plus of mortgages, I believe, are fixed rate, which means that everybody got their mortgages at sub 4%, sitting on a 3.5% mortgage rate. And so the people with a variable rate mortgage means that when the federal interest rate goes up, eventually their interest rates also go up and they have to pay those higher payments. People end up defaulting on those, which is what we thought we were going to see a lot of this year. And so that doesn't really mean that people have more money in their pocket. When interest rates drop, it encourages spending. Great point. That's a very good example. So when people feel like, okay, the economy is doing pretty good, the price of houses is not double what it used to be, now it's back down to normal. They're like, okay, maybe I can do the house and this other thing right now. I don't have to just basically choose this and really commit my whole life to this one thing. And so it allows people more legroom, more freedom to spend. But it's really the reason is when the Federal Reserve lowers the interest rates, the ability for the banks to borrow from the Fed and from the Fed to lend out to the government and everyone else becomes a lot cheaper. The government borrows more money, the banks borrow more money. What do the banks do with money? They go and lend it out 10 times more than what they have on deposit. This is called fractional reserve banking. And so they can borrow money for very cheap and then loan it out for very expensive. And they can loan out way more than they have in deposits. And so they're just stimulating the economy. If they had $1 million in the bank, okay, and they'd be able to loan out close to $7 or $10 million. Now that money is out in the economy getting spent on houses or bank or business activities, or maybe renovations, or maybe it's to go to school, or maybe it's to get a car. So loans are now back open. Car sales are booming. House sales are booming. And that's really the undercurrent of the economy is these microtransactions that make up the big picture. Consumer confidence, that's going to be on Friday. Consumer confidence, though, I missed that on the live. Do you think that people will think prices are still high for things which will turn bearish for equities? So the reality is, I'm keeping my eye on this OPEC situation. Oil prices right now is what's keeping inflation low in the States. So here's the thing. When you measure inflation, they typically do the headline number, and then there's the core number. Now, core PCE excludes food and energy. Now, I don't know about you guys, food and energy are the most expensive parts of my monthly spending, besides residence. Okay? And so if you look at that and say the reason they exclude it in the core is because there's too many fluctuations in food prices, because those are due to supply chain issues and shortages and seasonality. And then you have energy costs, which are kind of dependent on the overall oil market and not as stable. And so they're really just tracking the core goods that we all buy on a regular basis, the households, the toiletries, the stuff for the kitchen stuff, all the stuff that we typically buy, non-perishables, to see if those prices are coming down. So that 3.1% number for the inflation rate, that's for the household goods that we all typically buy on a like regularly. But what about food prices? You guys are eating out. Are food prices coming down? You guys are getting haircuts, the prices coming down. Ladies, you're getting hair done, the prices come down. You go to the mall, you walk into a store, right? T-shirts used to be a certain price. Now you look at the price and say, hold on, what is this? Right? Or you're shopping online and you're sitting there. I mean, Amazon and all these places make things cheap, but I think inflation is still around. And I think that we're lucky because everyone still has a job. But Jerome Powell said it at the very beginning of his interest rate policy change. This is back in 2020, back in 2022, when they finally started quantitative tightening. He said they're going to overcorrect until they break something. And he said that in order for the economy to crash, which is what breaking something is, we have to go into a recession, people got to lose their jobs. If we all still have a job, it does not matter how high prices go. We'll complain on it. We'll complain about it, excuse me, on the way to work. And we'll still pay the price because we have money. So I think it's inevitable that sometime in Q2 of next year, we head into a recession to get inflation meaningfully down. Now, I can be wrong because Jerome Powell mentioned the supply chain issues that had sort of led to a lot of the high prices. And he does have a point. In 2020, we were beefing with China already. And then COVID happened. So the whole world shut down. Supply chains were completely shut. A lot of decisions were made to start producing things in the States because we realized we were too dependent on China for medical supplies and things that were, consequential to the health of the United States. So I think that since then, there has been a bit of a change in the supply chains, people finding other places to get stuff. The biggest example for me that I can find is OPEC. So America producing this much oil this year, record amount, versus OPEC, which kind of they had a deal going on to produce less oil. And now they're beefing amongst themselves to reach the final deal for next year because there's a couple countries holding out. Nigeria and Angola both got screwed out the deal because they're one of the lowest producing nations in OPEC. However, whenever you do a cut in production, everybody has to be forced to produce less than they want to. And since Saudi Arabia is the largest producer, and they're the largest producer in OPEC, and they're already cutting their production down to record lows. They're already hurting. They're looking at everybody else at the lower producers saying, look, you guys got to take the hurt for this. You're not producing anyways. You don't need this big of a budget. Let us take the extra stuff. It's a little bit of back and forth. They got to figure their thing out. The oil play is the biggest kind of question mark for next year. It's an election year. Politicians want to get reelected, and gas prices are the number one measure of economic health. As stupid as that sounds, it's not stupid at all, but like we probably eat more food than we fill up gas. But the gas, every time you go to fill up gas, you get that taste where that thing used to say 45 and now it says 68, right? You know you're getting jibbed and you know it's Biden's fault. And so I think that they're going to do a great job of keeping inflation down strictly because of the election. Okay. Wouldn't cutting rates just put us in the same situation we're trying to get out of now? Miguel, you're 100% right, which is why I think Jerome Powell lied to everyone, told us all, and especially to kind of give us a holiday rally, that they're not going to cut rates next year, or said that they might cut rates next year to get the market excited. And I think he's going to go in January and say zero rate cuts in 2024. If we want to get out of this, Miguel, he has to promise no rate cuts all year. Like, we can't have rate cuts unless we hit a recession that's bad enough that we need rate cuts. And we're already at 5.5%. So they don't need to cut as aggressively as they've been cutting, even though some people say they do. But at 5.5%, we have so much room. They can go 5.5 to 5, then to 4.5. They can do 0.5% cut or 50 basis point cuts each time to try to get the recession down. And they can start to pump a little bit of money in the system and get it back up and running. I don't think they should do rate cuts at all, or else inflation will come back. Not, and if not for anything else, other than as soon as they start to cut rates, we all just go out and start spending differently, knowing that we're out of this mess and we're about to be on, back in 2020. So, people can borrow from the bank. Yes, exactly. More people borrow, more people spend. Consumer confidence, though I missed that part. Yep, yep. Don't sell gold, wait for the close. You guys are trading gold on a Sunday. Take a deep breath. Go and get your week started the right way. If you've been stressed out about trading, or you've been overworked, or you've been whatever, take the time on Sunday to prep for the week. Get all your shit ready. Get the clothes ready. No, none of that dirty laundry shit. Go and do all the things you got to do for the week. Set up a game plan if that's what you're trying to do. If you're in business, look at your analytics. Set up a game plan for the week. Do something. But don't just sit here and just start forcing trades in the market. If they do play out, good on you. But guys, don't listen to these people. Use your weekends wisely and build the right habits so that way when you're scaling up in your money, you get to keep the success. Not every time you have new challenges, you're out here going back to your bad habits. Ladies and gents, happy and safe trading this week. I made it the whole stream and I only cursed once, and that was an accident, and I apologized. So I think we're making progress, folks. Tomorrow, I cannot promise at all that there won't be any cursing because it's a new day. Happy and safe trading, y'all. Great to see you. If you have any questions,